The line that I have to pick up on to begin with, though, is the $25.5 billion of cost savings by 2022. Bob, how are you going to do it?
Well, we're going to do it by focusing on fitness across all parts of our business. So what you're referring to is about $10 billion of material cost savings and $4 billion of engineering that Jim Hackett disclosed at an investor event in New York back in October. And he said at the time that we were going to continue to work on improving our fitness across the business. We've done that. And today we're announcing another $11.5 billion across 5 parts of our business in terms of cost efficiencies and other efficiencies, particularly in the marketing and sales area. So as a result of that, what we expect is to be able to achieve our 8% targeted EBIT margin 2 years earlier than what we had anticipated in 2020.
Bob, I know you've been working on the 6 efficiency initiatives in particular, but for analysts, for investors right now, I ask the question again, how? What car line specifically are you going to cut? What areas of the global business could you perhaps retract? South America comes to mind. How are you actually going to execute this? I know you're talking about fitness, but how?
Well, what we're doing, first of all, fitness is around efficiencies. The thing that you're talking about is another, actually the second element of our efforts to become a much more competitive, high return, and also resilient business, and that's around where we allocate capital. So we are clearly going to allocate more capital to the high-performing parts of the business, and we'll be talking about that in our call today. And we'll be taking capital away from the lower-performing parts of the business and or looking at different business models, partnerships, alliances, to disposition those businesses appropriately. And we'll talk a little bit more about that in the call today.
So you're talking about taking capital away from areas like the compact, the mid-size cars, and perhaps pushing even more, as I know you've already announced, in the SUV space in particular, because these feel like the 2 elements of the business, the underperforming and the performing.
Yeah, absolutely. The high-performing part of the business at Ford is significant. It's large. It's incredibly profitable, tremendous business. We're going to be allocating even more capital to that to make it even larger and more positive for us. And that will take capital away from those parts of the business that we think we don't have a path forward to appropriate returns.
Can I also ask you what you're seeing in terms of pricing? We've obviously seen some pretty incredible gyrations in the metal space, aluminium, obviously in light of the tariff announcements and the potential damage perhaps that can cause with the sanctions on Russia too. What are you seeing and what are you hearing in terms of possible pricing trouble going forward?
Well, we saw pretty substantial increases in our commodity costs last year. It was over $1 billion globally. In this particular quarter, we'll be disclosing that we saw increases of nearly $500 million, and the majority of that was in steel and aluminum and other metals. And we do believe that, particularly in the case of steel, that was influenced in terms of pricing pressure from the threat of tariffs from the U.S. So that certainly is something that we're having to address, and for the full year we expect to see further increases, although probably mitigating on a year-over-year basis as the year progresses.
It's very difficult to see and to predict where this is going. What's the worst case scenario as far as the sanctions impact, that the tariffs that we've seen? Can you in any way quantify the potential impact to the business?
Well, we do multiple scenarios around areas of risk in the business. I mean, so far in terms of sanctions, we haven't seen anything material that's going to affect our business in Russia, but certainly working and watching that one very closely. And in the case of tariffs, we'll have to wait and see, because how much of this is negotiation strategy versus actual implementation and execution, we'll have to wait and see. But certainly it would have an impact on the business, and we think it already has had some impact, as I said, on steel.
And you're suggesting commodity costs overall a $1.5 billion headwind this year. Is that right?
Yeah, we had about $500 million in the quarter. We think there'll be less of a year-over-year effect in the subsequent 3 quarters. But at the moment, based on our best estimate, by the time the year's over, it's probably an increase of about $1.5 billion.
Talk to me about the US operations in particular and what the lineup's going to look like. I know you've started, or at least alluded to the prospect of a 90% of the lineup in the United States being pickups, SUVs and commercial vehicles. How quickly can you do that?
Well, it's going to happen pretty quickly, because we think by the time we get to 2020, about 90% of that lineup and our volume is going to be SUVs, trucks, and vans. We've got a lot of new products coming. Certainly the Bronco we've been public about. Everyone's very excited about that, but we have other things as well. And then other parts of the portfolio will change as we change the allocation of capital, but nothing more to talk about, at least at the moment.
I think for investors, particularly looking at the share price at this moment, there's been a great deal of impatience. I think they want you to get on with the job of stripping back and refocusing the business. What's the message here to investors that have been patient, now they're getting more impatient?
Well, I think the message is we understand, we hear you, and we've got it, and we're moving with urgency. And certainly the monetization, the identification of the $11.5 billion of incremental cost efficiencies and other efficiencies, the $5 billion of reduction in our capital intensity, and there'll be a few other things that we talk about in the call today will indicate that this business is moving forward. This team is making decisions and being decisive around allocation of capital, but also driving for efficiencies and fitness.
And you're willing to be even more ruthless if that's what's required?
Absolutely. I mean, what we have to do is we've got to generate the appropriate returns that we would expect and shareholders expect in this business, and we're moving forward with that mindset.